Do Etsy's earnings give us a window into how weak the consumer is here in the United States? And how the heck does any management over at Etsy even have a job at this hour? What is going on, investors? Hopefully, guys are doing well out there. Time to talk about Etsy, ticker symbol ETSY. Now, during the regular trade, Etsy got wrapped up in a broad market rally. It was up 8.75% to $109 per share. But in the after hours, after reporting Q1 numbers, which missed expectations, especially on that upcoming quarterly guidance, well, the shares are down over 11% in the after hours, down to about $96 per share. We'll certainly talk about this from a technical perspective as well. The fact that this stock has gone from, is that right, over $300 per share back in November, all the way down to $96 per share. Many of you will be wondering, is it time to buy the dip on Etsy? Now, in terms of the Q1, those numbers came in. We had revenues at about $580 million. We'll get over to the financials. We'll show those revenues to you. We'll walk through the costs and see how well this company did from a profitability standpoint in the most recent quarter. Now, that is only, and I say only, 5.2% year-over-year revenue growth. But again, Wall Street was kind of expecting that. In fact, they were actually expecting a little bit worse over at Etsy, just 4.37% growth to $574. The company came in about $5 million over their expectations. I think one of the biggest reasons why the stock is being slammed is, number one, you had this broad market rally, which brought stocks up like this. My guess is the fact that you had a 9% short interest on this stock. A lot of the news and sentiment and data, quite frankly, out there has been very negative, and you probably had short sellers having to cover as we headed into later this day. Certainly the case with Etsy. Those who held on to their short position certainly rewarded in the after hours if this holds through to tomorrow. But I think the biggest reason why Etsy is down is they are projecting in the upcoming quarter revenue to come between 540 and 590 million. So on the low end, we're actually going to decline month over month, or excuse me, quarter over quarter on that revenue side. Even on the high end, just outpacing revenues by 10 to 20 million quarter over quarter. But the consensus for the upcoming quarters was closer to $627 million. So the street was expecting about 18% growth. And if Etsy come in on the low end of that guidance, man, it'll be like really low teens or low double digits in terms of their growth rate. Certainly not necessarily something you can get that excited about. The other thing that it could tell us is Etsy, in my opinion, is kind of a fringe commerce site. Look, it's an $11 billion company, did over $580 million worth of revenue. I'm not saying that this is a small business when you look at this from kind of the larger view, but inside of e-commerce, Etsy is kind of a fringe site. It's kind of a niche site. It has its own types of sellers. It has its own type of products that tend to do well on this site. The company saw a huge amount of demand during the pandemic. Number one, from like mask wearing, I think was like a huge percentage of this company's businesses. Obviously, we've seen masks and mask mandates start to be pulled back to a certain degree, or for the most part, altogether, and we're seeing this company's sales start to decline and the revenue growth rate to start to decline as well. But when a company like Etsy is pulling back on their consensus estimates, pulling back on their guidance for the upcoming Q2. We saw the same thing with Amazon. We've seen the same thing with other retailers out there. It does give us a little bit of window that maybe the upcoming quarters, Q2, Q3, could be a little rough from a demand perspective. That's not to say that that's going to pull down these stocks even further, although when it comes to Etsy, it couldn't get much worse than it is. Now, what could get worse is Etsy sellers considered forming a union after higher transaction fees were passed down to the consumer, or in this case, the sellers on the platform. The transaction fee went from 5% up to 6.5%, up to 1.5. My guess is the sellers over at Etsy realized we could form a union and pay our union another 1.5 or pay Etsy another 1.5. I'm joking there to a certain degree, but here's the sensitivity of this company's business model. The fact that they can't raise fees in an extraordinarily inflationary environment, they can't go from 5% up to 6.5 on seller fees without those sellers threatening to form a union. That is certainly a problem over at Etsy. They've got to get that under control as well. I've never heard of a union on an online marketplace. That would be interesting if Etsy sellers are able to pull that off one day. Now, we had this revenue at 580 in the most recent quarter. Last year, we were at 5 550. Our cost of revenue just 172. That is the fascination with these types of businesses, and that's the most wonderful thing about this entire company. Are these gross margins are fantastic, and maybe this is what Etsy sellers are looking at. The fact that they spent 172 to make this 579, so you get gross profits of $406 million. Now, unfortunately, that's not where the cost ends over at Etsy. They spent a little bit more on marketing from 151 to 154, but the big cost increase over the last year on a quarterly basis was both product development going from 53 million up to close to 90 million. Then you had general and administrative go from 52 up to about $78.2 million. Your total operating expenses ballooned from 257 up to 322. So despite the revenue growth that we've had year over year, look at what happened to our income from operations. It went from 150 all the way down to $84 million. So we've seen a deterioration of this company profit. On top of that, the weighted number out shares outstanding got diluted as well from 144 up to 146. I'll show you where a lot of those shares goes, and I bet you can guess where they did. Now, from a balance sheet perspective, not super exciting. Honestly, you've got a little south of $1 billion. Total assets on this company sit at $3.7 billion. Look at this, all the way down here to long-term debt, $2.2 billion. So you have $2.2 billion worth of debt and just $3.7 billion worth of total assets. I understand this is an asset light kind of business model where the sellers are the ones kind of maintaining a lot of the assets, the inventory. This is just kind of a marketplace. It's essentially a piece of software or a website. You don't necessarily have to have a lot of assets, but if things keep turning for the worse over at Etsy and they can't eventually raise prices and maybe generate some more profits, well, from a balance sheet perspective, it's not that great. Now, from a cash flow perspective, maybe things get a little better. We have our net income number. It pulled down from $143 million last year. It came down all the way to about $86 million on the net income side for this year. Now, here's what you get to add back in. You get to add back in stock-based compensation, which went from $20 million up to nearly $50 million. So guys, on $86 million worth of net income, you paid executives $50 million worth of stocks for mediocre revenue growth, declines on the operating income side, declines on the EPS, decline on the net income, but your executives earned more than twice as much as they did last year. How do these people even have a job? Get to add back in depreciation as well. So obviously, when you get to add back in accelerated stock-based compensation and a depreciation number, which more than double, almost doubled as well, $148 million worth of cash flows last year, all the way down to $60 million. This company's completely gone in the wrong direction when it comes from the cash flows from operations. So our revenue growth has started to stall out. Our operating profits, our net incomes are starting to decline. The balance sheet doesn't look very good over at Etsy, and the cash flows have deteriorated quite a bit from 148 down to about $60 million. And the vast majority of that is going to the executives in the form of stock-based compensation. And we also had a repurchase of stock. So guess what they get to do over at Etsy? They get to issue about 50 million shares, give that to the executives, whether or not they've been selling those shares immediately or allowing them to mature a little bit. But guess what they do? Then they go to the balance sheet of the company and then go buy back $62 million worth of the stock. So I've always talked about here on the channel, when you have stock-based compensation on cash flows, I don't think it's fair to add it back in, because you see exactly what Etsy has done in the most recent quarter. They issued 49 million shares to executives and they bought back $62 million worth of those shares, still diluting you on a year-over-year basis as well. All things being considered, it's a disaster from a balance sheet perspective. This most recent quarter doesn't look good. It doesn't look like they have pricing power over at Etsy. The cash flows are deteriorating as well. And I tell you what, that all adds up for a recipe of a stock that was up over $300 and now is down closer to $100 per share. If I could show a picture of a Japanese steak knife right now, that's exactly what you're making. This is called a Japanese steak knife formation. This is otherwise known as a falling knife. Do you come in here and buy the dip on a stock like this? Absolutely not. Is there some areas of demand and support for the stock? Yeah, maybe down here at about $60 per share, but I still probably wouldn't really want to step in at that point. You're waiting for a trend reversal on this one. You're waiting for higher lows. You're waiting for the stock to get its momentum back, waiting for the news to be positive. But I think broadly, what we're seeing is a pullback of earnings estimates and revenue estimates for the upcoming quarters. Whether or not the stock market has that priced in, whether or not all stocks have that priced in, definitely a question investors are going to really have to weigh over the summertime. And certainly if those Q2 and Q3 estimates come in, then we have to start worrying about Q4 as well. Obviously, we know about the shutdown in China. That could impact Q4 as well, because the reason why we're talking about that is that slowdown was not reflected in Etsy shares despite going down over $200 per share just in the last year alone. The stock continues to move lower as they pull in these estimates. That's why Etsy could be a proxy for a weaker economy going forward. And the fact that stocks, even beaten up stocks like Etsy, don't have that weaker performance priced in, that could be worrying for stocks down the road if the demand picture is how Etsy and certainly Amazon and other retailers have started to paint it for Q2 and Q3. Hopefully you guys enjoyed today's video. We'll be back in soon with more. Good luck with your investments.